Good afternoon. It is a pleasure to be here, full of people who shape the hospitality industry across the region, and it must be one of the most exciting destinations on the planet. At STR, we help turn numbers into insights, and through those insights, we help to move businesses forward. With data from 90,000 hotels worldwide, we will have a look at the trends, what the trends are telling us, and more importantly, what they mean for the future of the hotel industry. I think we can all agree the last few years have been turbulent, fascinating, and in some ways surprising. Back in 2020 and 2021, it felt it was the end of tourism as we knew it. Many investors considered cutting their losses and walking away from hospitality altogether. But that moment turned out to be just a moment. In fact, 2023 and 2024 became the best years on record for global tourism. Hotel performances surged and average room rates soared. For hotel owners, the good times returned, stronger than before, with room rates hitting historic highs. And now, as the world debates the impact of some presidential policy shifts, like a few price increases on the US border, we're reminded the simple truth. Travel is resilient, tourism is essential, and hotels remain one of the most adaptable, revenue-generating asset classes in the world. To set the scene, I've pinched a couple of numbers from UN Tourism. And I also forgot to source them, so that's a little bit embarrassing because I think they are here at the moment. But just to set the scene, 1.4 billion international tourist arrivals. That's up 11% on 2023. The Middle East, 32% up on 2019. And Saudi Arabia, very, very strong numbers up on 2019. And it's nice to see Qatar and Kuwait with a return to form. So after the euphoria of the past 2 years, the hotel industry is now returning to its fundamentals, supply and demand. Occupancy levels, while facing some pressure from new openings, have largely stabilized. In many markets, we're now back to 2019 benchmarks. But here's the critical context since 2019. Global hotel supply has grown by 5%, just over. That's an additional 1 million rooms. That's a significant footprint, great for the vendors, suppliers in the room, more properties to furnish, fit out, and support. And for operators in the room, what this really means is to maintain the same occupancy as 2019, the industry now needs to sell an additional 380 million rooms. And the big question is, has global demand, did they manage to sell those rooms? And has global demand stabilized above pre-pandemic levels? And yes, it has. I mean, global hotel demand broke past the 2019 levels in early 2023. If you have a look at the dotted line here, that's where 2019 demand levels were. Since then, the industry has shifted from a recovery mindset to focusing more on year-on-year growth. And while some markets are still catching up, global demand has consistently outpaced. So comparing to 2019, just some of the big numbers, 2023, 3 to 4% above 19 numbers. In 2024, 5 to 6%, and year-to-date in March, 7%. So I think the key takeaway, hotel demand is healthy, reliable, and ready to scale. And will it grow at the same pace? Well, it's unlikely. In fact, actually, that would be a no, would be more accurate. So 2023 saw the major rebound. We can see the major rebound here in the first few months. But then, since then, growth has decelerated, signaling a return to normal market rhythms. As early as 2025, global demand is growing at about 3% year on year. But these figures do align with the big hotel company forecasts of around about sort of RevPAR growth of 2, 3, maybe 4% at the very most in 2025. So as I say, RevPAR is expected to grow 2 or 3% globally, marginal but healthy. Some regions will outperform. GCC is a very, very good example. At the moment, in terms of growth, the GCC markets are the strongest in the world. But just to summarize, so growth is slower, but still moving in the right direction. Predictability means better forecasting, more stable returns, and smarter investor decisions. And looking at the global occupancy now, if we look across the entire planet, global occupancy sits at about 68.5%. That's roughly 7 out of every 10 rooms are filled each day worldwide. Still remains a little bit below pre-pandemic levels, 1.6 below the pre-pandemic levels. But we are seeing some convergence between supply and demand, but it's modest. The regional headlines, Europe leads global occupancy performance in 2024, 70%, and the Middle East follows closely behind at 69%. And the global tourism rebound has really shown the pricing power. I think that's really where we can see most of the returns have come from. So despite rising costs across the board, from airfares to F&B, traveller appetite remains very, very strong, and average daily rates have continued their upward trajectory in 2024. Middle East leads the way with the highest average room rate, averaging $173 in 2024, a 2% increase. Europe and North America follow closely, averaging $162. China facing continued economic headwinds, reporting the lowest average daily rate at $56. Very, very tough in China at the moment. And Africa presents a more complex picture. ADR growth is real, but in many markets, currency devaluation skews the data. Still, there are notable bright spots. Morocco and Egypt are currently leading the continent in rate performance and investor interest. Just really one number to note on here. This is year-to-date March, Q1 2025. Middle East really stretches its legs, the GCC markets, especially the markets of Saudi Arabia, the UAE, and Qatar. The occupancy for the first 3 months, 74%, which is pretty strong. And the average room rates in the Middle East average over $200, the strongest in the world by some margin. Europe will catch up as we head through the year, and I think the US will have a pretty good year despite rhetoric voiced in certain media circles, but I think it will have a good year. And the markets that are heavily influencing the numbers across the Middle East, Riyadh, Dubai, Abu Dhabi, Makkah, Medina, and Kuwait. But the stabilization of rates is a good thing after the last few years. How far have the hotel rates climbed since 2019? And I think this is very, very interesting to see how far they've actually moved. So generally speaking, the market is paying 25 to 30% above 2019 levels. And I've often wondered if this will continue. But if we take the Middle East as an example, 27% ahead, 28% in Europe, 23% in North America. Again, we've got some currency fluctuations in Africa and a little bit of a challenge in mainland China. But before we get carried away, one note of caution, and I kind of guess in a way the elephant in the room is occupancy. We've talked about the supply growth. So when we look at all the classes across the world, this is 2023 and 2024, we can see the huge growth in average room rates. From luxury all the way through to economy, probably not so much in mid-scale. But as I say, the elephant in the room is occupancy. Not so much of an issue because we understand a lot of new supply has come in. But occupancy has actually slightly dropped on 2019 numbers. But luxury is the main beneficiary, plus 30% on 2019. But all the classes, with the exception of one, very, very strong from a room rate growth. Let's have a quick look at the GCC. It is the strongest market when we look at the year-on-year changes. And I think this is interesting to see from 2014 all the way through to March 2025. And this is a running 12-month number. Fascinating to see 2019, where the GCC was. This is the room count. And it's 146 million rooms annualized in 2019. Supply has grown 16.6%. And you could probably argue the more important number is the demand, which is effectively occupied rooms. Occupied rooms has grown by 22.4%. Now, you don't see these sort of numbers anywhere else apart from around the GCC. Very, very encouraging numbers, and we know tourism arrivals have grown substantially as well. And how does it impact the occupancy? Again, we're flowing from 2014, and I think maybe we forget the times from 14 to 19. Trying to sort of take in that new supply was a little bit of a challenge for the GCC countries. But now, occupancy has grown 4.9% since 19, and 22.9% the average room rate has grown. So very, very good numbers across the GCC. I know there's a lot of numbers here, but I think it just really paints a fascinating picture of how strong the 6 countries are in the GCC. So we've got room supply, demand, occupancy, room rate, RevPAR, and room revenue. What the numbers are, what the numbers were in 2024, and how they've changed on 2019, 23 to 24, and also the year-to-date numbers. Huge growth, combining supply, demand, and average room rate, a 46.9% increase in revenue across the GCC, room revenue. Some fabulous numbers. Yes, we're always going to see a little bit of a slowdown in 24 and 23, but nothing to get too concerned about. I've got 3 slides that look very, very similar, but I just wanted to highlight some of the key performances across the GCC. Riyadh has the strongest average room rate, nearly $250. And I think it sits just behind New York and Paris as the highest average room rate in the world. But you can see all these markets pretty strong as you get towards the Eastern Province, a little bit weaker. But generally speaking, strong numbers, and this is full year 2024. I just want to push on to the year-to-date numbers, March 2025, and pick out the holy cities of Medina and Mecca. You can see Medina at 82%, Mecca at 78%. Very, very strong average room rates. So obviously with Ramadan shifting into March, we can see how strong that was. Riyadh suffered as a result. Obviously, the holy month of Ramadan, March, was a lot quieter in Riyadh, but you can see that a lot of the movement shifted towards the holy cities. And finally, I've just actually run some April data because I keep hearing how good April was. And I know it's never a good idea to talk highly about the noisy cousin a few hundred miles away that way, but you have to doff your cap to the UAE markets of Dubai and Abu Dhabi. Some staggering numbers, 90% and 89% in April. Very, very strong average room rates. The Saudi markets are pulling back as well. So very, very interesting. And really, I think we're all in agreement. The golden age of the Middle East and a region that is in full control of its destiny, and that's what I like. Jeddah has had a tough year or two. Traditionally, the highest average room rate across the region, but certain factors has created some issues for Jeddah. But it is nice to see that the Jeddah Grand Prix was very, very strong. We've got a 90% occupancy through those few days with an average room rate of 1,500 Saudi riyals. So let's have a quick look at Saudi Arabia. This is room demand. Similar, you've got the 2019 number, and you can see the seasonality across the kingdom. Very, very high level numbers, but I think it is interesting to see that occupied rooms are up 12.4% on 19. That's an additional 5 million rooms occupied. And on a year-on-year basis, January demand was up by 55%, and February was up by 15%. So the transformation of Saudi Arabia will hit some bumps as the new supply comes through, but generally speaking, it is being absorbed, and the kingdom looks strong. Again, just really sort of draw your attention to the change in 2019. Very, very clearly paints the picture that Saudi Arabia is moving in the right direction. Some huge growth on the 2019 numbers. Nothing to get too concerned about as we look towards year-to-date numbers in 2025. Ramadan shift had quite a lot to do with that, and we are seeing some strong numbers in April. Quick look at Riyadh, and these are daily averages, and I guess if there is any sort of slight sort of area that needs a little bit more attention, is possibly the weekends. They're literally the averages, and you can see how they've grown year on year. So midweek, Sunday, Monday, Tuesday, and into Wednesday, the midweek market has grown as a percentage against last year, and the weekends are a little bit flat. That's probably where some attention can be made. Riyadh season, a very successful 5 to 6 month period, and we can see very, very strong numbers on the early part of Monday, Tuesday, Wednesday. Friday, Saturdays, averaging sort of 61, 62%. I'm always curious about the average room rates. They do drop a little bit at the weekend, but driving in leisure business at the weekend at 800, 900 Saudi riyals may be a little bit challenging, but I don't own a hotel here, unfortunately. But moving through, this is quite interesting. I was here for the presentation earlier, and I did see some numbers. And these are our numbers, and I know we're a long way away from some of the big events, the Expo and the World Cup, but you can see the impact of mega events on these destinations. And I think it's probably no surprise to see that Qatar had the highest average room rate at $731. That was just for the actual period of the World Cup. But they are very, very tough to manage, and it doesn't tell the full story because you have to look at the occupancy numbers as well. And in my humble opinion, sometimes destinations do not get it quite right. Having a look at these two, and I think it is quite interesting. I mean, your expectation would be that the occupancies would be very, very strong. And it's not that they're weak, but they're not above the previous year's occupancy. And I think this is one of the big challenges for World Cup venues, but you can see that the average daily rates, they do push up quite significantly. And overall in Qatar, did achieve the highest average room rate, but very, very interesting. There was, a lot of concern about the rooms in Qatar, and would Doha have enough rooms? Well, quite clearly with the occupancy there at sort of -1, you have to look into more detail, but I think it's quite interesting. Average room rate, we know, actually sort of climbed very, very high, but I think it's just interesting to see those numbers. One or two on the looking ahead, and I think our general view, we're looking here at the markets of Jeddah, Riyadh, Dubai, and Abu Dhabi, fairly general numbers. But we do think growth will dramatically change it will continue in 2025, but Q3 2025 may be a little bit of a drop-off from an occupancy point of view. Q1 2026 will be the Ramadan changing. The UAE markets will still trade pretty well, but to maintain the very strong winter performances may be challenging. No hotel stays, GCC citizens, no regional travel, and no events. So it is quite a tough time, which is why we think there's going to be a drop-off in occupancy and room rate in Q1 2026. A quick look at pipeline. I know Jonathan earlier on was talking about some numbers of 302,000 rooms by 2030. I'm not sure we'll actually quite get there, to be perfectly honest, and we'll see why when we see some of these slides. But you can see that Saudi Arabia has the most supply, rather the most pipeline in those stages at the moment. And if all these projects come to fruition, the supply will increase by 60%. And you can see across some of the other GCC countries. The full pipeline that STR has for KSA at the moment is 120,000 rooms. Theoretically, these are signed contracts. It doesn't mean they will all open, but I think it's fairly solid information. But you could see there in 2025, 2026, the opening dates. That will be a little bit of a challenge because opening these hotels sometimes is a little bit slower. But we can see how much growth there will be in Saudi Arabia in the next few years. And then looking at the big giga projects, some of the most fabulous hotels on the planet. You can see all the different gigas from Neom, Diriyah Gate, Red Sea, all the activity in Ru Al Medina, 29 hotels, Neom, 50 hotels. So these are all sort of signed contracts and, very, very exciting times for Saudi Arabia. And as a percentage here, you can see that Makkah is the giga projects, 26% new supply as a percentage of all, 24% in Makkah, but a lot of hotels coming into Riyadh. I think we've got about 26,000 rooms coming into Riyadh, and that will double the supply. So when I started putting this together, I tried to make it slightly less data heavy, but I feel I failed miserably, and I've just given you an absolute thunderstorm of data. But I hope it's been helpful. We will make most of these slides available so you can digest them in your own time. But with that, that's me. Thank you very much.